Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Welcome back to the podcast. This week, our guest is Jason Massie, who is the founder and president of Massie R&D Tax Credits. Welcome, Jason.
Hey, thank you, Gary. Thanks for having me.
So, what made you get into the accounting law field?
I started off for various reasons, very shallow. When I was in high school, I worked for a CPA firm mowing their lawn. And it was owned by a family friend. And to be honest, he drove a different nice car every other year. And I said, I wonder what he does. And so when I was during their busy season, I would see them in the office. I'd go up there on a Saturday and they're all doing tax work. And so I just would stop in everybody's office. I'd also clean their offices. Okay. So I'd stop in and say hi, and they'd tell me a little bit about what they do. So my senior year of high school, I took an accounting class and I did really well. And that just kind of led to being an accounting major. And I was always interested in law school, but I was a little too practical. So I thought I better get a degree in something that actually has some market value, because what if I get to law school and I don't like it?
Right.
So I worked for 4 years there in Washington, D.C. When I got out of undergrad, and I still had the law school bug after that. So I became a CPA, worked there in D.C., and then I went back to law school. And then the path forward to being in tax credits really started when I was in undergrad. I worked for Arthur Andersen, which was one of the big accounting firms at the time, and they sent me out to Federal Express. I was in Memphis. FedEx was one of their clients, and they said, Jason, go observe this research credit meeting that the client's going to have with the IRS. So I said, okay, cool. So I go out there in my suit and I walk into the room, and there's a bunch of Arthur Andersen suits and the FedEx suits on one side. So I take my little seat and my notepad. And on the other side were a bunch of IRS engineers, not quite dressed the same.
Right.
But we were in this windowless conference room at a facility that was next to their sorting facility there at the airport. It was as boring and dull as you wouldn't imagine. I mean, it was just horrible. And we started this conversation, and the FedEx and Andersen team had brought down this professor from the University of Chicago who was going to talk to the IRS about statistical sampling, because they had used sampling on their research credit process. And so my job was just to listen and take notes. And so as I started listening to this Chicago professor, he was speaking at this level.
Right.
Everybody else in the room is right here. And I was watching the IRS, and they did not understand a thing he was saying. They were bored. His message was not resonating with them. And I came away from that going, why didn't we just take the IRS into the sorting facility, which has got incredible, the planes are backing up, the packages are coming in, they're sorting left and right, they're getting on another airplane. I was like, this is where the technology is, not in that conference room. And so it kind of taught me as a very young person, wow, this research credit is kind of a complicated area. You not only have to learn how to claim it, but also how to convey it to the IRS in such a way where they're going to approve it.
Right. Now, how many years ago was that?
That was 1989. So wow, 34 years. Like you and I are getting old, but I can't believe it's been that long,
So I mean, obviously, you've been doing this for a long time. You have a lot of expertise at this. You're asked all the time to come speak to groups about the different R&D credits and things that are out there. I guess in a nutshell, can you tell us kind of what R&D credits are? Because some people think it's anything I do, if it's new, is R&D. Not necessarily is that true, but can you give us just a snapshot?
Yeah. So I always start off by telling people you can have a deduction for tax purposes, but that's generally only worth whatever the tax rate is.
Right.
So a 35% tax rate means your deduction's worth 35 cents. A credit is worth $1.
Right.
So when we have a tax liability and it's $100 and I got you a $100 R&D credit, man, that's cash that you don't have to pay the government. So it's found money. And what happened was in the 1970s, when things were quite dysfunctional in our country, there was the oil embargoes and the gas shortages and hostage crisis. And anyway, the Congress in 1981 was looking at what can we do to keep companies here in the US versus them sending all their R&D to Japan and Germany, who both had publicly stated at that time, we're going to win the R&D war. And so the credit was born, and it was to incentivize companies to do research in the US. And it's basically wages of the people doing the work, supply costs of things that they're building related to R&D, and contractor spend. So you don't necessarily have to be doing the work all yourself. You can hire a contractor like a 1099 employee, or you could hire a company, for example, a software company, to design software for you that you then incorporate into your business. And so you take those three and you add them up, and there are particular things that are called research and development activities. And that's what the workers are doing. They're designing, developing, improving, enhancing an existing product that already is on the market, or a new product that is being totally created from scratch, or it can be a process improvement. So you can have plants and facilities that have a particular process of manufacturing. Maybe they need to add a new piece of equipment, so they got to test out the whole line again for that new piece of equipment, or maybe they're trying to be safer, or they're adding it's going to be faster. So better, faster, cheaper, quicker, right, safer. And those are a little bit harder to figure out, but at most manufacturing companies, they have, an engineer, and that's their job, is to make sure everything's working properly. So when you accumulate these activities, then you look at the expenditures that are associated with those. For example, if you have an engineer and they make $100,000 on their W-2, and it's box one of their W-2, and they spend 50% of their time on R&D, then you say 50% times the $100,000 salary. You have a $50,000 cost now that goes into your R&D credit calculation. And every dollar you put into the funnel, the R&D funnel, is worth about 10 cents. So you have to have a lot of costs in there for it to be a big credit, but it's all relative, right? So I would work with companies now that would have, several $100,000 worth of credits a year, on up to Walmart, which has $120 million a year of credit. Right. So that's why I'm in this business, is because I started my career at Arthur Andersen and with Ernst & Young. I was at a big law firm, and what I noticed was those firms, they're still using the tactics and the process that they used in the 80s. They're still using that today. And what that is it's an interview forward approach. So to give you an example, when Federal Express, back in that 1989 example, when they needed to get the Arthur Andersen people some information, we didn't have internets or phones. Right. So you drove out to the FedEx facility and you sat in front of them and you talked to them about what they're doing. And that process of having the accounting firm ask the questions and the engineers give the responses, the accounting firm would write it up and ultimately prepare the calculations and the documentation. But what I noticed, and what I kind of felt like was ridiculous, was the accounting firm would have 4 or 5 people in the room, from the partner to the senior manager, the senior, and the staff. The staff person, the lowest person on the totem pole, is trying to write the notes. So you have a 22 or 23-year-old trying to listen to a 55-year-old engineer tell them all this technical stuff about what they did. And so they're like, the engineer's talking about the carbondiculator and this and that, and the person's like, I don't even know how to spell that. I don't know what that is. But I felt like too, Gary, back then, like when we would have open enrollment for healthcare, it was a pain. We'd all go into a conference room, and the HR administrator would pass out huge reams of paper with all the different plans. You would have to go home and compare this and that. It was really there wasn't a chart even to have it all summarized nicely. You'd come back in, you'd say, okay, these are my selections. And it would be like 3 months later, you'd get your card.
Right.
Well, if you take that today, open enrollment for healthcare, you get a link from your HR department. It has a portal. You go onto the portal. There's like a personalized video.
Right.
Hi, Jason. Last year your spend was this year. This year's here's some recommendations. I click, click, click. I can print my card. So that is a fantastic way to use technology. So I always said, the weird thing about the research credit is it's supposed to reward companies for being innovative.
Right.
And so I'm talking to people who are developing really cool technology, and yet I'm still using this interview approach to get the information from them. So in 2004, when I left my last law firm, I was like, I'm going to start a company. We're going to focus on how do we bring the R&D tax credit process of getting information from engineers into this century.
Right.
And so since this time, it's almost been 20 years now, I've just focused on what are technology tools that we can either give to the client or have the client fill out or have the client implement that will make their life easier, also make my life easier, to where their engineers don't dread this conference room interview approach. So the big four, still the big gorillas out there, they have R&D practices, and I'm very thankful that I learned in that environment because it was an amazing place to learn about the credit. But they still do things that way, that interview approach, interview heavy. Now, COVID has changed it a little bit because people weren't in the offices for 2 years.
Right.
But anyway, that's kind of my calling card. That's why my company exists, is we want to take people practices and technology, marry them together, and customize whatever that is for that client.
It's kind of funny that you're saying that R&D credits, obviously it's to innovate and things like that. And you have this old school thought that, hey, we're going to still do this the old way and interview and try to take what you're saying and put it in writing, as compared to, okay, let's use some technology, let's use some innovation to be able to do this. So I don't know how many, when you're looking at it as a percentage and stuff like that, how many are still going to the big gorillas to do this and are saying, well, wait a second, why are we doing this in such an old way of doing things?
And let me give you another example, Gary. About 7 or 8 years ago, I met with a VP of tax at a pretty big company, maybe 10 billion of revenue. And he said, Jason, I pay PwC $1 million a year to help me with this credit. Now, it was a big credit. It was 25 or $30 million they were getting. So as a percentage,
right,
paying PwC $1 million. But he said, what I don't like about it is two things. One, we have 20 locations in the US. They're sending 4 people to 20 different locations, and they're taking one of my tax guys from my tax department with them. And so you have 5 people that are sitting in a room with one engineer,
right,
at 20 different facilities. It was 18 weeks of the year that his tax guy was gone on the road.
wow.
So he said, I want you to come up with a process where my guy doesn't have to travel with you and you do things a lot cheaper than PwC. So I said, okay, challenge accepted. And what I did was I wrote down every step that I thought we needed to take in the process to get this study done. And then I looked at every line item and I said, do you need to be a CPA or a lawyer to do this step? And what I found was there were only a few of those items that really needed to be a CPA lawyer. What you really needed to do is leverage technology better and also just be friendly. Because a lot of these engineers are like, my day job is to invent something cool for the company. You're asking me about something that happened a year ago. So can't you come up with some better way for me to give you this information? And so I was like, okay, I'm going to use a scalpel approach. And so everybody on my team is going to be a surgeon. Somebody's going to prep the patient. I'm going to come in and do my thing. And that's kind of where we went. And we decided, okay, for this engagement, this big study, yes, I figured out a way to reduce their fee down to about $400,000 from the $1 million.
Wow.
I also was able to do the entire study before PwC gave them their last year's report. So I was able to lap them.
Yeah.
And so at that point, we knew we kind of had proof of concept, like doing things remotely, doing things smarter in terms of how do we engage with them. So it's not just all about the technology, because, for example, I could send a survey to an engineer and just say, fill this out.
Right.
Tell me about what you did last year. A lot of times they'd rather sit with you in a conference room, and talk to you about what they did rather than fill something out.
Right.
But if I train them, if I give them sample answers of what I'm looking for, if I have a little webinar that shows them, if I have videos that are customized to show them step by step, if we have a little help desk that's going to walk them through everything should they need that, then they could actually fill out something at their kid's soccer practice or Saturday morning while they're drinking their coffee. And so that's kind of what we found was most engineers below a certain age kind of like the flexibility of being able to answer you on their own time. And also when you start to do that, you can do that. If you think about it, like if I'm going to try to go to 20 locations, that's a lot of travel. That's a lot of expense. It's a lot of Jason Massie time or my team's time. But if I want to send out 20 emails right now, it's done.
Right.
I can get on a video call like this and have all 20 people that I was going to go see all hop on in 30 minutes, tell them the instructions, send them a link, they can fill something out. And then all of a sudden project's done in a day versus how many ever weeks that would have taken to schedule. So.
And it sounds like it makes more sense also, because if you're doing this with this engineer this year, they're looking at, okay, we're going to continue doing this each year down the road, because that's what they're paying me for, is to come up with new ideas. So I'm learning this is how you want this. I like the way it is, so I can do it as I go. And just like you said, it's like, okay, you already lapsed one of the gorillas in the fact of you got your stuff done so much faster, which as the client, that means I'm getting the money back in my pocket a heck of a lot faster, which I certainly want. And you reduce the cost, which again is improving my bottom line. So it's just, again, it makes a whole lot more sense to do this in a new way, as compared to how it's been done in the past.
And Gary, one other benefit that's huge is when the accounting firm has that junior accountant writing up, they know how to wordsmith it in such a way. They'll have the tax regulations over here.
Right.
And it'll say you need uncertainty in this process of experimentation. So lo and behold, over here, well, the engineer said it had uncertainty and process of experimentation, and it matches. The IRS is wised up. The IRS will get a report written by one of those companies now and say, you know what, this is kind of watered down. It has all the legalese that I need to see, but I don't really believe it. So what they'll do in the audit is say, I want to interview the SME. Mm-hmm. And a lot of times they'll show that write-up in front of the SME's face and say, did you write this? And they'll say, no. And they'll say, do you recognize this? No. And so what I'm trying to do is get the engineers to speak in their own language, tell us about their project, and then I'm putting that directly in my final report. So when the IRS reads it, it's written. I have written by engineer, John Smith.
Right.
And I have his words and I have his documentation that he provided me and all that. So then the IRS already has it. It's not in a nice little package that they can review. And they hardly ever ask my clients to interview them anymore now. And that's a big thing. So the IRS is generally about 3 years behind. So if you think about it, what did you have for lunch yesterday? Do you remember?
Yeah,
Most people don't.
Right.
You're going to ask an engineer 3 or 4 years down the road what he did back in 2019.
Right.
Now, if he wrote it down and he gave it to you and he wrote it out and he gave you all the documents, then he can refresh his memory to at least see. But if he was just in an interview, he doesn't remember that from the next day. And the accountant watered it down so much that it's not really good evidence anymore. So there's a lot of benefits. I'm looking for evidence so that the IRS will sustain this credit. That's the number one thing. We don't want to claim a big credit and have it all disallowed.
Yeah. Right.
And I'm trying to be more efficient for the engineers, for the tax people, for me, my team. So it's kind of a marriage of two things that are both good results for the client. So.
Right. So now, Jason, obviously this is your specialty. This is what you do day in and day out. What are some of the mistakes that you're seeing of these CPA firms that kind of do a little bit of everything and they try to do these R&D credits? What do you see some of the issues that are happening?
Yeah, so let me give you an example. I speak at a conference in DC every year that Morgan Lewis, the law firm, puts on R&D. And so 7 or 8 years ago, when I would come and speak, about 20 different CPA firms would send people there, their staff there to train, to learn about the tax credit.
Right.
And it would be the big four and BDO and Grant and kind of the Crow and then the next tier even, but there was only about 20 firms that would send people. TCJA, when it got passed, it made the research credit permanent in the tax code. Right. And it actually, Trump's administration then took away some of the other things people could get. And so the research credit even became more valuable. I did this same speech at Morgan Lewis in November of 2022, so just a few months ago, and there were 93 different firms there.
Wow.
So from 20 to 93. Now they're all wanting to have, every corner CPA firm out there is wanting to have an R&D practice because it's sexy and it's valuable. It's a very valuable credit. So they all want Jason Massie to be there. And so what's happening is the IRS, I don't know if you remember the old I Love Lucy show, but there was one where I Love Lucy, where they went to the chocolate factory and Lucy and Ethel are working on the line. And so when it's coming in slow, they're able to handle the chocolates. But when things start getting rapid, like they're putting it down their shirt, they're eating them. And it's just this hilarious scene. I view that as the IRS. IRS workers are at the assembly line and these tax returns are coming in with R&D claims. And a few years ago, it was slow and they could keep up with it and handle it. COVID hit, which really hurt the IRS. They weren't prepared to do things electronically or remotely.
Right.
So tax returns got stacked up in mail offices and rooms, and even if they were filed electronically. So what's happened recently is the IRS in the last 2 years has said, we don't really like the 7 or 8 numbers on the tax form anymore. We want you to give more information. And they're looking to change the form, actually. They said for refund claims, we're going to just go ahead and make you attach a bunch of additional information. So a lot of these other CPA firms put junior people in charge of this area, said, go read the tax code and then start selling some studies for our clients. They don't really know. They haven't, I mean, this credit was birthed in 81 and I started in 89. So I've been around for most of the life of the credit. I've seen so many cases, so many different examiners. So you can't take a 55-year-old guy who's been doing this for that long against a 30-year-old who just is supposed to go learn it. And that's the difference between, I think, what we offer versus other companies. It's really, it's knowledge in terms of exactly what the IRS wants. And it's also problem solving, figuring out how do we, from a big company perspective, come into your company and figure out the best way to communicate with your people, what kind of tools we want to use, and then get their buy-in and then successfully run the project. And I think a lot of firms out there are just trying to rush into this business, not really realizing that it's got a lot of hair on it. There's a lot of complexities related to it.
Right. So obviously most of the companies that you're dealing with size-wise are large because obviously, that's where the R&D credits are coming from. From somebody who's looking at, that their business is smaller, and maybe I don't know, maybe their sales are 5 to 10 million, but they are coming up with, computer-wise writing new code for something. What would be your suggestion to them if they're thinking that they do have possibly an R&D credit issue?
Yeah, and so almost every company out there, there's software companies, and so if you're in manufacture or you're in another business and you want to buy somebody's software, that's not an eligible item for the research credit. But a lot of people have an accounting system and they want this new software that they bought to talk to their accounting system. And SAP is a good example. SAP has to be, there's middleware that has to be written to make SAP work within your environment, in your company's environment. That middleware is eligible for the research credit because it's not something you were able to buy from SAP. You actually had to create it. And a lot of times you use your internal software guys to write that code. Supply chain is a big thing now, and logistics. So a lot of people are writing software custom for their business related to that. If you have uncertainty related to the fact that you couldn't go out and buy another third party and you're having to create it from scratch, then you're going to be eligible for the credit. So I feel like it's every company is going to have their own materiality threshold. For some small business owners, $40,000 is like huge, like free money. Also, states have credits. I'm down in Atlanta, Georgia, and we have a credit here in Georgia that even if you have losses, you can take it against your payroll taxes. Now, that's a very unique situation, but other states around the country have. So it's not just the 10 cents on the dollar. You add in the state, now it's 15 or 20 cents on the dollar. It can be real money. So I just tell everybody out there, if you feel like you're doing something innovative, or if you're hiring a firm to do something innovative for you, you should definitely explore it and see what's out there. My firm is Massie Tax Credits. We'd be glad to help vet anybody out there. I can generally, honestly, now that I've been doing this for so long, I can talk to somebody for 10 minutes and say, yeah, you got a credit. No, you don't. Back of the envelope, here's what it looks like. So it gives people kind of a business ROI related to the credit, which makes sense. And a lot of firms will struggle, and they might try to bill you hourly to help you figure that out. My firm is just a fixed fee thing. So whenever we help somebody do a potential calculation or feasibility, it's usually free.
Right.
And then if they want to move forward, we'll give them a fixed fee to do that. So, but I enjoy talking to people about this area. It's obviously a passion of mine and something that I've been doing so long now that it's not any sweat off my brow to talk to somebody for 20 or 30 minutes and kind of give them some advice. So.
Right. And I think that that's something important for the listeners to understand too, is just like you said, it's like, you've been doing this such a long time, you're going to be able to identify it right away, as compared to having, an accounting, tax firm, whoever come in, an attorney come in and say, oh, well, here, we can help you figure it out. I think it's, one of those things that it's best to go to somebody who's been doing this for a while to be able to do this, because like you said, we can tell them pretty quick and help them out.
Gary, it's a little bit like a general practitioner in a doctor's office versus the brain surgeon. It just depends on what you need from. If you need brain surgery, you need to go to the brain surgeon. So this is an area that, it's very niche area of the law. I was really one of the first people to kind of form an R&D only company that this is all we do. And people mocked me at the time, but it's worked out okay.
Right. Just a little.
Yeah.
So, Jason, we've gone over, a lot of things here real quick. What is it that I haven't asked you that you wish I had?
One thing that I would say is we put on a quarterly roundtable. And this is for tax people who are curious about the credit, or maybe they're handling the credit already, or maybe they outsource the credit. But it's for tax people, CFOs, business owners, whatever. We do it once a quarter. It's free. It's 1 hour of CPE for you CPAs. And we actually have it coming up this Thursday. I'm not sure when this is going to actually get published, but it's this Thursday coming up at 3 p.m. Eastern. You can sign up at my website, MassieTaxCredits.com. But what we do is we get a DC lawyer, and this quarter is Alex Sadler from Morgan Lewis. He'll talk about Section 174. So everybody's really interested in 174 because you have to capitalize costs now. And that's a big thing. I'm then leading a panel with a guy from Fujifilm and McAfee and a couple of other companies. They're going to talk to you about what it is they're doing related to 174. And then I have one of my colleagues and I at the very end of the hour are going to talk about some practical application of this particular thing. So 174 is a big piece of the research credit, but because it hasn't been changed legislatively, every company now is having to deal with this. So that would be the thing. And then, people can sign up for our newsletters and other things related to this. We have maybe 250 people, tax people from around the country join on these webinars. They're wildly successful and I think very informative. So.
Great. So Jason, if people like what they hear, besides signing up, the tax guys and business owners signing up, how can they reach out to you to talk to you, maybe schedule an appointment to be able to talk to you about what they think they may have?
Yeah, they can you probably don't want them going through you, but they could go through you to get to me, or my email is jmassey@MassieTaxCredits.com. So, or they can go to Massie Tax Credits. There's a little about us thing. They can click on that. I have a CEO that helps to run the business from a sales perspective. I've got a marketing lady, so they can get back to you. But yeah, I would love to just do a video chat with anybody out there that thinks they might have opportunity, and I can at least help you decide where to go forward. If it's of a certain size that my company doesn't do, I could probably recommend somebody else to help you with it.
Great. Jason, really appreciate your time today. Appreciate the wisdom. I think that I know I've learned a lot, and I think our listeners will have learned a lot from this, and appreciate that you're available as a resource to them also.
Sure, anytime.
Thank you.
All right, thanks, Gary.
So this week our guest was Jason Massie, who's the founder and president of Massie Tax Credits. We'll see you guys next week.
This show has been produced by Market Domination, LLC. To discover how you can have your own show completely done for you and turn it into a real published book and become the authority in your marketplace, go to www.marketdominationllc.com/podcast offer.